we have Yatra Online as well. That one's been in focus recently following its acquisition of Globe Travels. Earlier in the day, we spoke to the CEO, Dhruv Shringi, and began by asking about the 128 crore acquisition that they've made, and listening to a slice of that.
This is a very important acquisition for us. Over the course of the last 12 months, we've been consistently talking about how we are looking at strengthening our position further in the corporate travel sector. We feel the business travel market is rebounding quite strongly in India and will continue to grow at almost 1.5 to 2x of GDP growth for the foreseeable future. So in that backdrop, we think it makes more sense for us to continue to scale up. And by adding the business of Globe Travels, we've done exactly that. This will add about 750 crores approximately of gross bookings to our business. We'll add about 360 customers to our current about 850 customers. And it's going to be fairly synergistic as well because Globe has two main businesses. One is business travel, and the other is MICE, which is the meetings, incentives, and conferences business. This business, especially the MICE business, is a highly profitable business. We've organically also incubated this business about 6 months ago. So the combination of what we've done organically plus the acquisition of Globe will make us one of the largest players in the MICE category in India. And as you would most probably know, MICE is a highly profitable segment, right? And it's also a segment that's growing at more than double digits. So with that backdrop, we think the combination of Globe along with Yatra's own business travel will create a very strong market leader in the country when it comes to business travel and MICE.
All right. And, with this kind of acquisition, you've mentioned in your press release that you'll be targeting newer geographies, to increase your market penetration. And also, you will add new capabilities to your existing line of business. So, give us some more details as to what kind of geographies you're looking to tap into and what will these new capabilities be like?
Sure. So historically, our business has been more focused on northern parts of India and western parts of India, whereas Globe comes in with a strong presence in the eastern market. With the footprint that we will get through Globe, we'll be able to now expand more aggressively into eastern India. Globe also has a good footprint in southern part of India. So that's another market that we will use the Globe platform for growing aggressively into these markets. When it comes to adding more products and services, as I said, we've already incubated MICE on our own, but the combination of Globe along with our current organic efforts will make us one of the market leaders in this category. So that gives us extra leverage to be able to go and pitch to our customers. It gives us a better leverage with the suppliers. So on the whole, I think it expands the product portfolio and the strength of both the teams quite significantly. So that's something that we are quite excited about, that, the MICE business, we feel is an area where we'll be able to grow quite rapidly over the course of the coming 12 months with high margins.
Right. And, in terms of the revenue, overall, Globe Travels contributed roughly 250 crore to the consolidated revenues of, Ramakrishna Forgings. And this has grown to 250 crores from just 160 crores in FY12. So if we calculate the revenue CAGR, it's roughly 4%. So I want to understand that in terms of, how will you plan to leverage this particular acquisition in terms of revenue growth, and what are the kind of revenue growth you will expect going forward?
Sure. So if I look at that CAGR, I think the CAGR, maybe while the numbers are right, the CAGR has a COVID period as well in the middle. So if you strip that out, the CAGR goes up significantly. Plus also it's a relatively small business in the overall sphere of Ramakrishna Forging, right? So they are more of a manufacturing company, and this is a subsidiary that they've had for a number of years. Right. For us, this is very core business to what we do. We've already got a large customer base to which we can cross-sell the kind of products and services, like especially the MICE business that Globe brings to the table. Right. So on the back of that, we see significant growth coming in from there. Secondly, Globe today has fairly limited amount of technology adoption. Yatra is the market leader in terms of business travel technology. So we'll be able to leverage our technology into the existing customers of Globe as well. So we feel on the back of that, we should be looking at Globe growing in the 15 to 20% range for the years to come.
All right, so 15 to 20% is the growth target for this particular acquisition. All right, let's now talk about how Q1 FY25 has shaped up. You've seen some kind of pressure when it comes to Q1. Revenue was down by 9%. Adjusted air ticketing margin was also impacted by roughly around 24%. Even hotel room bookings were impacted, and even EBITDA was impacted. So this was just Q1. Now this might be on the back of elections as well. So I want to understand that what are the kind of trends that you're now observing in Q2, and overall FY25, what is the kind of revenue growth that you're expecting, as even in terms of margins as well as bottom line?
Sure. So if I look at Q1, and we spoke about this on our analyst call as well, we have two parts to our business. One is the consumer part of the business under Yatra.com, and the other is the business travel arm, which is Yatra for Business. The impact was more severe on the B2C part of the business on account of just the overall macro industry that we are looking at, the supplier consolidation that we've seen. So that's impacted more the B2C part. The corporate part continues to grow at a very healthy pace. We've also scaled back some of our investment on the B2C part because we had this acquisition which was in the works, and the acquisition more than offsets the decline or the drop that we see on account of B2C. So this is overall a part of a broader strategic direction that we've chosen as a company to double down on the B2B part of our business and the corporate travel part of our business. It's about 50-50 of our mix right now. 50% comes from corporate travel and 50 comes from B2C. Our endeavor over the course of the next 3 years is get to a stage where about 70% of our business will come from the corporate travel arm and about 30% will come from B2C. The reason we are making this shift and strategic change in direction, and we've been doing this for the last now 3 to 4 years, is we feel that the corporate travel part is a much more stickier part of the business. It allows for much greater leverage of technology. We can cross-sell other products like expense, MICE, right? Those are the things that we've been talking about, expense management solutions, MICE products. So we feel that's a more synergistic and a more stickier business. So that's the direction that we've taken as a company. So our efforts will be to continue to focus on that aspect and drive further growth over there. Coming to your question on where we see, current trends we see, on the B2C side, more of a baselining of where we were last quarter. So last quarter became the baseline. And from there, now we're looking at gradual growth on the B2C side. The corporate part continues to grow quite healthily.
All right, and in terms of margins, because you said that from that 70% of having B2C, the mix will become 50%, and because B2B is more margin accretive, I believe your margins have hovered around 3 to 4% in the last year. So then, where will the blended margins be at?
So we would expect margins to continue to improve on account of this change in mix. That's one of the key initiatives that we've undertaken. Our sense would be that we would expect at least a 25 to 30% improvement in margins happening on a consistent basis, right? So you'll see that play out every quarter, starting from the third quarter of the year.
All right. So then by the year end, we can expect margins to be in the high single digit then.
That's right.
All right. Okay. The next question is in terms of, the MICE part that you mentioned, which means meetings, initiatives, conferences, and exhibitions. You've recently organically also started that for corporates. So I want to understand how is that working for you, and what are the kind of growth levers there?
So I think that team is off to a fantastic and a flying start. So that's one of the initiatives that have taken off really well. The advantage of that is that historically we've got a large customer base, but we never had the operating skill sets of this business. It is a fairly specialized business given the nature of events that we are trying to address. We are talking about large events, talking about thousands of people going and having to manage these kinds of group movements and building some technology to enable that. And given that we've got the customer base already in place, it's been really good for us to be able to have the team which is now focused on the execution. So they're able to cross-sell this really well to our existing customer base. And now with the combination with Globe, it gives us tremendous amount of market power as well.
Right. And, in terms of your debt, it has significantly reduced from that 170 crore to just 21 crore now. By when do you expect to become, net debt free, one thing? And secondly, the second question is in terms of the competition that you're already facing from the unorganized sector. What are the trends that you're observing there?
Sure. So in terms of the debt, we are now at about 20, as you said, 20 odd crores of working capital facilities. These are just working capital facilities which are there in the ordinary course of business. I think we will hover around these levels only. A little bit of working capital facilities will continue to be there and be used to maintain relationships. And for that, I don't see any change in the foreseeable future. In terms of the competition from the unorganized sector, I think that competition's always been there. But what we are witnessing is a huge shift in demand pattern on the side of consumers, especially the large business enterprises first started adopting technology. We've now seen this wave come into the mid-tier market as well. More and more mid-scale companies also want to adopt technology to streamline their procurement processes for travel and other business services. So we are definitely witnessing a significant trend over there and benefiting from it. So while competition is there, I think this change in consumer behavior on the enterprise side of companies wanting to digitize their business processes, this is an irrevocable one. So this change will continue to gain more and more momentum as we move forward.
All right. Hope you've had a productive last half hour when we've spoken with both of these managements. But with that, completely out of time on this edition of the SMID Show. From myself, Anushi, Mahima as well, and everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.